Hi, and welcome to Let's Talk Bitcoin, a show for everyone interested in the future of money. Coming up on today's show, Project Talk, Phonecoin, Open Wallet, and Pork Therapy. Max Kaiser gets clever, or is it crazy? He wants to peg Bitcoin to the dollar. We talk about it. I sit down with Paul Hughes to dissect the dangers and find out what the future might hold for Bitcoin. You asked, here it is, altcoins, litecoins, namecoins, frycoins. We spend the second half of the show digging into the cryptocurrency competition. And finally, Community Roundtable member Elizabeth Plauché has some helpful advice on how to educate those in Washington about the future of money. Visit us at letstalkbitcoin.com to subscribe for free to our twice-weekly show. Let's Talk Bitcoin runs entirely on Bitcoin donations and my out-of-pocket expenses. If we can hit 1 Bitcoin of listener support per show, we'll be able to bring on a full-time associate who will join me in my task of hunting stories and conducting interviews, which means more and better content and more frequent releases of extra interviews on off-show days. So far for episode 2, we've received 0.641 Bitcoins from a total of 17 donors. Thank you very much. Remember, with Bitcoin, there is no too small to matter. If you're new to Bitcoin and would like to learn in a more structured environment, please visit the Bitcoin Education Project on Udacity for a free course that will tell you all you ever wanted to know and more about Bitcoin, what it is, how it works, what it means. You can visit letstalkbitcoin.com/learn to be directed to this free set of classes. Even if you can't support the show financially, you can really help us out by sharing our project with anyone who should be paying attention to the future of money. Let's Talk Bitcoin is released under an open source license which allows for the non-commercial clipping, remixing, and posting in any format or to any site you want, so long as you include a link to our site, letstalkbitcoin.com. We're also actively recruiting both on and off-air talent for this and other shows to come. Once again, if you're interested, please contact me at adam@letstalkbitcoin.com. Visit letstalkbitcoin.com for our new webpage, staff bios, opportunities to join the Community Roundtable, and of course, our per-episode listener support tip jar. My name is Adam B. Levine. I'm a writer and speaker who likes to explain complicated topics in understandable terms. That's really what we're doing here, taking the complicated topic of cryptographically secured money and helping people see what it could mean in their own lives. Joining me in our quest for clarity are Andreas M. Antonopoulos, an expert in decentralized networks and secure systems.
Hi.
And Dr. Stephanie Murphy, a scientist and syndicated radio host.
Hi.
So projects, everybody's got them. We're talking about them. Last time we talked about projects that we were personally working on, and I think that that's something certainly we're going to do sometimes. After last week's episode, I spoke with Daryl, who actually runs a service called Phonecoin.com. It's something that's just started out, but it's basically like a remote control for your Bitcoin wallet using SMS text messages. He let me know about this because we had been talking about the prevalence of M-Pesa in Africa and how there needed to be sort of a dumb phone solution for sending Bitcoin value. And actually, he had been working on one. And actually, since I've spoken to him about this, I found out that there are 2 or 3 others that are also in development doing the same basic concept. I thought that was pretty neat. If you're interested, you can check it out at phonecoin.com.
I think we have a lot of really smart listeners.
Yeah, absolutely. Everybody's involved in stuff. There's just so much opportunity out there right now.
Yeah, definitely.
Bitcoin has this funny way of making everything a greenfield, as it's called in the tech industry, just a wide open opportunity. I'd like to talk a bit about a project I'm working on, a community project called Open Paper Wallet. Now, if you've got more than, say, 20 or 30 Bitcoin, you quickly realize that keeping them online is a bad idea. So paper wallets are a great solution where you can cold store your money on paper in a safe, and that's what we're trying to do here. We added a few security features like opaque stickers that you have to scratch off in order to read the keys, backup stubs, and beautifully designed notes that come on pre-perforated sheets so that anyone can print QR codes on them and use them. This project is open source, and last week we completed the first design. 20 or so designs from 6 different designers, all released into the open source domain under Creative Commons licenses for the use of the community. So that project's going very well. Exciting project with a lot of participation. Open Paper Wallet.
So for users that aren't familiar with paper wallets, because we're talking to some people who are new to Bitcoin, most people view Bitcoin as an online currency. So how does that work?
That's the beauty of it. In fact, that all you're doing is associating Bitcoin with a private key and essentially locking it up into a key that's stored on paper. And by storing the key on paper, you can put it in your safe. It's not on your computer. It can't be hacked. So that's the huge advantage. Now, of course, if you want to use that money, you have to take it out of your safe, scan it, and then destroy that node because now it's no longer secure. What it allows you to do is keep, as I do, about 95% of my Bitcoin offline and only keep pocket change on my online wallet for daily spending. Kind of like you would do with a safe deposit box or bank in the real world. I mean, you don't carry your entire retirement savings in your wallet.
I really like all those features that you mentioned, Andreas, and I've been interested in paper wallets for a little while, ever since I realized, just how insecure it can be to keep Bitcoins on online wallets. So I'm really curious to see how this project unfolds, and I think I'm going to go check it out right now myself.
This is a timely topic because actually after we spoke to David Perry last week, as I was doing kind of the wrap-up conversation with him after the interview, it turns out he was robbed. His blockchain.info wallet, where he was using, I believe he had a YubiKey too, somehow was drained of all of its value. Again, this is just one of those things where even if it seems like you're in a very, very secure situation using multiple forms of authentication, it still isn't as secure as simply being impossible to hack it because the information just isn't available online.
That's too bad to hear about David's experience. With a paper wallet too, there's some other risks, I guess. I mean, at first when I heard about paper Bitcoin wallets, I was very skeptical. I was thinking, well, why would you want something paper? Paper is a physical item. It could be destroyed. You have to keep it in a fire safe. You have to make sure you don't lose it. There's all kinds of things that could go wrong with paper. So even though you may eliminate some of the online security risks, there are additional physical real world risks that you still have to worry about. There's also the idea, I don't know if you guys have ever heard of this, but I've known some people who are printing paper wallets, and if you print it on like a wireless printer, that information is going somewhere, and potentially somebody could intercept it.
A lot of the hacks we see, if you like, are really low tech. So a lot of people are worried about, oh my God, can my 256-bit key be cracked and all of that. Meanwhile, they use password 123 as their password. So these attacks are usually low tech. People get their wallets mugged, usually because they're not sufficiently secured. Now, if you do want to store things offline on a paper wallet, you have to take additional precautions. So we've been testing for water damage, damage from acids. We've been looking at how to protect them from CCTV cameras that can see a QR code from 200 feet away, how to protect them from fire and other types of damage. So one of the main innovations we have in Open Paper Wallet is a separate tear-off stub that has a backup copy. Now, that's one thing you can't do with real money. You can't make a backup copy to store in a second safe, which you can do with a paper wallet. It's quite an interesting solution.
It's a really innovative way of solving some of those problems. Very cool. So I'd like to talk about my project. It's not directly Bitcoin related, although Bitcoins are a frequent topic. As I mentioned, I'm a radio host, and I have my own podcast. It's called Pork Therapy, pork like a porcupine, and I am not actually a therapist, but it's a show about personal freedom and happiness, and Bitcoins are a very frequent topic of conversation, as well as just general financial and economic and job freedom. You can find it at porktherapy.com. That's PORC therapy.com. It's a weekly podcast that is also a live show. It airs on Friday nights. And then I also post like podcast only content on the feed quite frequently as well.
I love your theme song.
Thank you. That was Hannah Hoffman did the theme song.
Porktherapy.com.
Foxycart.com is a better checkout experience, empowering developers to create flexible, powerful, custom e-commerce in less time, while equipping merchants with the fastest checkout flow available to their customers. Foxycart is built for web professionals. It can serve as a foundation for advanced custom e-commerce deployments or for quick and easy, single-product online stores. And of course, Foxycart supports Bitcoin. Visit foxycart.com to learn more. So guys, I read this article the other day from the Huffington Post, and it was by Max Keiser from the Keiser Report. He's a pretty, I guess, famous financial commentary person. And he was suggesting something that really surprised me, because what it said to me was that perhaps he doesn't quite get how Bitcoin actually works. And what he was suggesting in this article was that Bitcoin should be pegged to the US dollar. He suggested a rate of $100 per Bitcoin. And then he said that essentially the Bitcoin Foundation should act as like central planners and manage this and enforce it. So what do you guys think about that?
Blasphemy. That idea is anathema to the entire foundation and design of Bitcoin. And the whole point of it is a decentralized currency that doesn't suffer from some of the manipulation tactics that you see in fiat currencies. At least that's the principle that a lot of the purists in the industry talk about. I think that kind of idea will find a lot of resistance. But also, I think it's just plain wrong. I mean, it fails to understand the deflationary characteristics of Bitcoin, which are built into the system. And so therefore, if you did peg it to the dollar, what it would do is it would create a tremendous opportunity for arbitrage. You'd have a black market where Bitcoin would be sold at higher and higher rates. I certainly remember 2 decades ago when I could change money in places like Budapest or Slovakia, or places like that, at 3 or 4 times the official rate. So if we want to repeat that in Bitcoin, sure, great idea. Is Ben Bernanke around? Maybe he could take over the Bitcoin Foundation.
Those are excellent points. There's going to be a market exchange rate, the way that people really truly value Bitcoins. And then there's the official exchange rate with any currency that is pegged, and that does create great arbitrage opportunities. Maybe that's what he really has in mind. I mean, it kind of surprises me that somebody like Max Keiser wouldn't understand that.
Really what you would need next is currency controls. And of course, in order to enforce currency controls, you need to limit the number of places where people can exchange it, and probably change some of the characteristics of Bitcoin.
The iron fist would have to clamp down more and more. And that's really so antithetical to Bitcoin, because Bitcoin is free money, and not free as in beer, free as in liberty, right? So I don't think a lot of people who are really, really interested in Bitcoins would want to see that happen. I want to speculate on some of the reasons why. I think that there are some people who are hearing about Bitcoin and they're interested in it, but they're also feeling really scared because they see the volatility and they see the fact that right now the price has, gone through some pretty serious fluctuations recently. And they feel scared about that because they think that, look, people could lose a lot of money on this. People could make a lot of money on this. They want something that's more stable. And so there's the temptation to sort of use this regulatory mechanism of control to try to ensure that stability. But you really can't get stability in that way because, like we said, it just doesn't work. People are going to create black markets, and just not going to happen. And even if it could happen, what would be the cost? The cost would be essentially destroying the whole basis of the currency and taking away a lot of people's freedoms.
We agree that the price would be basically impossible to peg to the high value of $100. But if you just think about it like a floor, then suddenly it makes a little bit of sense. And so I think that anybody who's familiar with how Bitcoin works can see that it's impossible to keep people from transacting it at higher values than whatever the arbitrary level you set it at. But what if that's not the point? What if the point is to just prevent the potential of a crash back down to 1, or the potential of a crash back down to some lower number?
I have a bit of an anecdote on that topic. In the 90s, I worked in a hedge fund, and I apologize for that. I remember the day that the Prime Minister of Sweden came on TV and said, no matter what, we will defend the value of the kroner. The hedge fund people in that room cheered and started selling like crazy. The boss screamed, "Last one out of Sweden, turn off the lights." You can put a floor on a currency, and all you're going to do is enrich the currency speculators as they beat you over the head with that and make a lot of money in the process.
Isn't that what Max Keiser does in this case, though? He's putting together a $10 billion fund specifically to invest in Bitcoin, so it seems like that would be investing in Bitcoin anyway that's profitable.
Oh, sure. In effect, he'd end up solving the very problem that he's worried about, because the reason we have volatility in Bitcoin is because of low volume. And the economy is easy to swing around. If instead of a 2 billion economy, it was a 22 billion economy, it would be a lot harder to get these kinds of volatility expressed directly in the price. If he brings 10 billion in, that's great. It will really provide a lot of inertia. I mean, that's really what it is. Think of it as the difference between a zodiac turning and a cruise ship turning. The US economy is a cruise ship. And so, for example, when you have volatility in the labor market and things like that, it doesn't really express itself directly in the exchange rate of the dollar, or if it does, it takes about 3 months until you see some small fluctuation. Bitcoin gets whiplash every time something changes because it's a small economy. It can move around quickly.
So we all agree that really, regardless of what were to happen, the way that this has been proposed just flat out wouldn't work.
It's a solution seeking a problem, really.
I sat down with Paul Hughes of Vivation International to connect the dots from our interview on episode 1 with Bradley Jensen on FinCEN, and really we talked about the end of Bitcoin or something else.
Paul Hughes. My day job actually has nothing to do with Bitcoin at all. I actually run a company called Vivation International, where we do workshops and seminars, and we teach people empowerment skills and emotional healing skills. However, I have been involved in the technological arena for almost 20 years. My bachelor's degree is in physics, and I was actually hanging out in those digital encrypted currency circles back in the 90s. There was a lot of interesting conversations online. Actually met some interesting people in those days. So I kind of got an early insight into what digital currencies are and how they work. And so I've been following this very closely for quite some time.
So, Paul, you and I have been talking over emails about the interview that we did with Bradley Jensen on the first episode of Let's Talk Bitcoin, and thought that you had some really interesting perspective.
One of the things that I've noticed is people are conflating Bitcoin with Bitcoin exchanges and other aspects of the Bitcoin ecology. And most people are forgetting to make that clear distinction. Bitcoin is a protocol, is decentralized, and there's nothing, for example, stopping me from having a Bitcoin client on my computer and you on your computer, and you and I are just doing this, exchanging Bitcoins back and forth. When you talk to Mr. Jansen, he made the point that, look, FinCEN's got these guidelines that are going to come down possibly with prosecutions because of the possibility of money laundering and other types of issues. And those are legitimate concerns. I don't see any reason why those exchanges can't be compliant. But what he said, though, he said something very extreme, in my opinion. When and if FinCEN decides to prosecute these exchanges for not being compliant, he said, this is the end of Bitcoin. Not this is the end of Bitcoin exchanges in the United States, or this is the end of that Bitcoin exchange. It is the end of Bitcoin itself. And so I thought that was a very, very strong claim. At that point, I was like, well, gee, we need to, I would have asked him, well, how can you make that claim? I mean, for example, how does FinCEN regulations apply to the other 190 countries in the world? I mean, granted, the United States does have some pretty strong political influence. The real question is, how does that actually stop Bitcoin itself? And I would have asked him that question. And I think you tried to. He kind of, sort of sidetracked and said, look, this is what FinCEN's going to do, and it's going to be the end of Bitcoin. I guess that bothered me because I see that happening so much in all the conversations I've had.
The reason why I didn't push him too hard on that issue, because he totally did avoid the question, was because I kind of get what he's saying. Even though FinCEN technically only has jurisdiction in the United States, I think that we all know, you can look at things like drug policy or just in general, policy tends to follow the money. And the United States has the money and gives it out to more people really than anybody else. So therefore, they set a lot of the rules. Do you think that if Bitcoin exchanges were made illegal and the transaction of Bitcoin was illegal in the United States, what do you think would happen?
That's what I'm saying. I think that's important to make that nuanced interpretation, because to say it's the end of Bitcoin is not actually accurate. It would have been fair to say this could be the end of Bitcoin exchanges in the United States. That in turn could have set up a sort of a policy domino effect where it would have begun the ending of exchanges in places like Europe, possibly England, possibly Japan. But then as you move more and more into the periphery, into the third world, that I think those abilities to enforce that becomes less and less. And I'm not saying that's a good thing. I'm not saying that that's, oh gosh, this is, Bitcoin's going to do just fine. It's definitely going to hurt Bitcoin, but it's not going to kill it. And that's an important distinction to make. Money tends to go where it can. Capital tends to flee and go where it can. And so with Bitcoin, it's obviously extremely disruptive to the existing banking system. There are a lot of people, not necessarily criminals, but there's a lot of people who have a lot of money who have an interest in seeing something like Bitcoin succeed. I mean, there's that recent exposure of something like $37 trillion of offshore assets. Some of them, of course, were oligarchs and criminals, but most of them were just rich people trying to hide their money. There's definitely this, this tug of war between sovereign nations trying to collect tax revenue and money trying to escape it. Because here's the thing. If you look at eGold, I had to do my research before the interview. They were not compliant. They were not actually getting people's identity. They weren't going through the trouble of getting IDs and going through all of the normal procedures that a bank goes through. They didn't do that. And because they didn't do that, they got shut down. And so people are sort of making that comparison. Well, gee, Bitcoin's going to go the same way as eGold. Well, there are two different things to say about that. One is eGold was a centralized sort of system, and it was more or less one or two companies. So they were a single point of failure. Two, what's keeping these exchanges in the United States from actually complying? It might be expensive, but it's not impossible. In other words, I don't think FinCEN is necessarily saying Bitcoin's illegal. They just want there to be a way to track monies going from Bitcoin to cash, cash to Bitcoin, to make sure there's not any sort of illegality happening.
But isn't
I
there an
don't.
inherent conflict here with even the idea that currency, it seems like, if we're talking about value in the world, isn't that a zero-sum game where if somebody's winning, it means somebody else is losing? And the current system that we have right now is one where the dollar has most of the value stored in it, and everything else is sort of backed by that. So you can see how, from the perspective of someone or an organization that has the dollar as its core tenant, it would be kind of scary to look at this other system coming up and potentially being a superior product, because ultimately that's the problem here, is that Bitcoin is
you're
better at
absolutely
being
right.
money, right?
Oh yeah, you're absolutely correct. I mean, if we get right down to it, I mean, Bitcoin is very threatening to the ability, for example, of people who control fiat currencies, the Fed and other banks, to inflate the currency.
Do you think that I mean, I just have to think that since governments are made of people, that has to come into the equation when they're making these decisions.
Yeah, I agree. I mean, the bottom line is Bitcoin, I think, is very disruptive. It's disruptive to the current economic regime and the way it's run. Just like, for example, music sharing was disruptive to the existing, music thing.
Right.
So they are going to. I mean, it just makes rational sense that they're going to do whatever they can to stop it or co-opt it. And so to me, that's a rational conclusion. I've come to that conclusion too. But given the fact that that is their intention, or that is their desire, and that is a rational sort of response, the next question is, well, what can they actually do? They could attack it legally, which they could do. And right now, FinCEN hasn't said they're going to do that. They're just asking the money exchangers to comply. We're speculating. What if they just declare it it's illegal? It's used for money laundering, pornography, terrorism, that kind of thing. And they just go out and flat out outlaw it. That is certainly a possibility. And quite frankly, it seems that probably a likely possibility given the nature of Bitcoin. At that point, I don't know what's going to happen.
No, it's you get off into the weeds. I totally understand.
Yeah. No, this is a big topic, and so it's like there's so many different ways to go here. In this particular case, where I was responding specifically to Mr. Jansen, was he made a very specific claim. If FinCEN goes after prosecutes them based on the way the law is written, which is money laundering and so on, and that they have to be under compliance with FinCEN rules, that it's the end of Bitcoin. And I was simply challenging that specific statement.
So if you think that it wouldn't go away, take that same comparison and let's move it to the Facebook MySpace thing. Facebook didn't kill MySpace, but one could argue that MySpace is not doing very well relative to that relationship now.
So I guess, are you implying essentially then that Bitcoin could essentially succeed on some level? It wouldn't supplant existing currencies. It would simply find its own niche. That's where I've been coming from. I think that Bitcoin is not necessarily a currency. It's not necessarily a commodity. It has properties of both, but it's also unique. As John Matinus says, it's its own asset class. Bitcoin will eventually find its own niche. The question is, what niche is that going to be? Is it going to become a mainstream niche that there'll be a lot of what I call legitimate money going into it, and that legitimate money will in turn have political influence and bring it sort of a legitimacy, the same way as PayPal, and that eventually the rest of the system will catch up and will move forward? Or will it get pushed into the system D economy, into the underground economy, and become sort of a black market thing? I think nobody really knows the answer to that. Bitcoin, it won't die. It will, at the worst, it will go into this sort of fringe underbelly, kind of like anaerobic bacteria got pushed under the water. That might end up being its niche, it's sort of this black market thing.
It has utility at that level, even. I mean, that's kind of the interesting part about it, is that it's very, very hard for it actually to be destroyed because of its decentralized nature, and because it frankly has utility, even if it's to that really small minority at a very low value.
Right. Take Zimbabwe or one of these other small countries where their currencies got inflated completely out of proportion. I could easily see, I think it's called M-Pesa. It's that mobile minutes currency system they're using in Africa. I could easily see Bitcoin sort of getting a good foothold there, and not because of its price point with any other fiat currency, but just as a medium of exchange. It's a simple, easy system where people could sort of do it as a unit of account, and therefore, even if the price is going up and down like crazy, they're not going to really notice because their economy is becoming self-contained. They've found their own sort of localized currency. The idea is, how do you make a currency that regardless of its legality, is unenforceable? I mean, it's at this point, it can be argued that music piracy is essentially unenforceable. They have it on the books, but over 50% of internet traffic is BitTorrent. I think Satoshi Nakamoto, whoever that person or persons were, had to have considered that. It's like, look, this is going to be outlawed immediately. That just, to me, is a sort of an obvious given. And so when I hear about, they're going to outlaw it, instinctually I'm thinking, well, that may not matter.
A lot of it is not about Bitcoin. A lot of it is just about the dollar and the other currencies that are kind of in play. Because again,
Yeah,
it's not like Bitcoin is so good that it's horrible. It's Bitcoin is so good that it makes everybody else look horrible.
That's exactly right. And I think the other thing, and I think this is the reason I've been sort of a big fan of Bitcoin, the last few years, given the 2008 banking collapse, is thinking, gee, we could all end up in a horrible economic mess. I mean, I remember 2009 was a pretty tough year for a lot of people, me too, in terms of my business. And I could see Bitcoin, even though it might be illegal, let's say. So let's say they outlaw it. This is sort of the last desperate attempt to sort of pop up these fiat currencies. At some point, I could see the whole currency thing collapse. I mean, there's a lot of evidence of that now. I mean, the yen's going crazy, the euro, the ECB, the troika, all those people are going crazy. I mean, there's so much stuff going on. The entire Ponzi scheme that is our financial system collapses. Bitcoin's still there. It's this resilient sort of thing in the ecosystem. And I could see everybody starting to use it. If all these banking systems start collapsing, it's not going to really matter what people think about it, whether it's legal or not. People just start using it. I think that's the area to start thinking about, and to the degree that it's actually enforceable. I mean, if they're losing money, if they're having regulatory problems, the question is, how can they enforce it?
The type of people that we're talking to with this, it's difficult for them to imagine anything besides the U.S. dollar paradigm. And it's difficult for them. I mean, even if you're in a different country, we're still living under the U.S. dollar paradigm as kind of a global culture. And it's hard for people to imagine something that's never been. That's the end game if things go the way they look like they're going to go, and if the actors who are in play respond in a way that is logical from their perspective. Do you have a lot of value in Bitcoin knowing that, or are you just waiting for the crash? Because it seems like if you believe it's going to be banned, then that would be the time to buy.
I actually am going long. I purchased Bitcoins a while back. I got those Bitcoins mostly for emotional and philosophical and political reasons. And I'm thinking, I could get rich from this. If each coin becomes worth $100,000 or $1 million, I'm going to be worth a lot of money. But that wasn't the reason I got into it. I got into it like, I believe in this. I'm going to put my money where my mouth is. People have been hearing me push radical decentralization for like half my life. And so I thought, I should go up forward and just and invest in this because it's a cool idea. And it's been very, very educational. I mean, the amount of money I invested, I've easily gotten my worth back in terms of education, just in terms of using it and having that investment there, being emotionally invested, philosophically invested, financially invested, has essentially bootstrapped my knowledge and about how these types of things work. I think it was in late February, early March, with the whole Cyprus thing. All of a sudden, it just went off the chart. The growth rate really started to change. And I thought to myself, there's a small chance that this is going to be this is going to go crazy, and it's not going to go back. But I said the more likely chance this is a speculative bubble, and that speculative bubble is going to pop, or something's going to pop. And that's exactly what happened. And I see that still happening. I still see these sort of speculative things going, but it's going to get less and less severe over time. And this is, of course, assuming that there's no FinCEN, legal attack going on.
The other side is that you don't need to store any value in Bitcoin for any amount of time whatsoever in order to extract the value that it brings from that perspective. And that's always been a very interesting thing from where I sit, because it means that the value functionally doesn't matter. If you have an application like Bridgewalker where you can, take money stored in dollars, transmit it into Bitcoins, and have it transmitted out on the other side back into dollars again, with no sort of latency, then you get all of the advantages of the Bitcoin money transfer, and there's probably a small fee associated with it.
So you're talking about like BitPay.
Is that how BitPay does it as well?
I think so. I think the way I understand BitPay is that the idea of it is, hey, look, you can set up yourself as a merchant. You can accept basically cash. It gets translated into Bitcoin, and then that transaction happens at a very low rate. It's basically like 1% or less than 1%. Again, it happens really fast. So you're not having to deal with the price fluctuations of Bitcoin itself. It's being simply used as a means of transmission.
Using it as a means of transmission as opposed to sitting in it for any length of time where you're then exposed to market movements. I mean, that's kind of the interesting part, is it makes the price irrelevant.
The thing, though, of course, there is that because you're going from cash to Bitcoin to cash again, you fall right back under FinCEN regulations. At least that's
absolutely. From a regulatory standpoint, it's a mess. If you were going to separate the functionality of Bitcoin from the volatility of Bitcoin price, I think it would be very doable from a implementation standpoint. Whether or not you'd be able to legally comply while doing that is, of course, the question we're talking about.
If you can create sort of a Bitcoin ecosystem or a self-contained economy where everybody's just dealing in Bitcoin and it becomes their own unit of account, then it doesn't matter what's going. You don't need to exchange it back to dollars. There's no issues with FinCEN the way it's written now. Everybody's paying themselves in Bitcoin. It's never going into dollars or any other currency.
I think that you've nailed it there. That's what's going to happen if FinCEN winds up doing this, because functionally they're saying that that's okay. They're saying so long as you never touch another currency with Bitcoin, then technically it's not a currency. So, I mean, by that standard, you're talking about a whole new type of consumer being created.
Even though that might have a difficult time getting going in, say, the U.S. or in first world countries, I could easily see that getting started in third world countries, because it's kind of like that leapfrog issue. They went directly from having no phones to cell phones.
Right.
Right now they're completely locked out of the whole Visa, MasterCard, PayPal thing. Bitcoin is something that, it's open source. They can download it and they can immediately start using this system. I just read something, I think it was a week or two ago, where one of this NGO guy in Nairobi, Kenya, who started going around to the different tribesmen and saying, hey, have you heard of Bitcoin? They're like, what's that? And they had heard, of course, M-Pesa because using their mobile phones, but they hadn't heard of Bitcoin before. And they seemed very enthusiastic about the idea.
Thanks for joining us today, Paul. I really appreciate you taking the time.
Yeah, no problem. Thanks, Adam.
If I showed you a website where you could easily purchase electronics from the world's largest distributor with Bitcoins at 0% markup, would you think it was too good to be true? Good news, it's real, and it's at bitcoinstore.com. Choose from 500,000 items, save money over Amazon and Newegg, and convert your Bitcoins to real-world items. You can even buy with privacy. All they need is a shipping address. But don't take my word for it. See for yourself at bitcoinstore.com.
Paul gave us some great ideas here, and I think he's absolutely right that the end of Bitcoin exchanges is not the end of Bitcoin. I think people underestimate how hard it is not only to shut down Bitcoin technologically, which obviously that would turn into a whack-a-mole game very similar to what we've seen with Napster, but I also think it's difficult to shut down Bitcoin legally. And part of the reason for that is that it's difficult to arbitrarily shut down bits of the economy when there are corporations behind it. U.S. law is corporate friendly. And as I like to say, when due process is fictitious, only fictitious entities have due process. So the only people who have due process now are corporations, and they can make a pretty good argument that Bitcoin should not be banned, cannot be banned, and that the government doesn't have compelling reasons to ban it. And those arguments can go pretty far. At least the U.S. government is limited by the Constitution and what it can apply. A good example of that is what happened in the copyright laws. When Sony tried to sue Betamax back in 1984 to stop them from distributing VCRs on the idea that VCRs were basically piracy machines. And this went all the way to the Supreme Court. The Supreme Court decided that Sony couldn't do that. And one of the interesting concepts that came out of that particular case law was the idea that as long as a product has any non-infringing use, or at least a substantial non-infringing use, which means if this tool can be used to do something legal, you can't just classify it as broadly illegal and ban it. That's why crowbars are illegal to buy, because people sometimes need to break into their own shed. That's why a lot of products that could be used for many, many illegal uses, but have substantial non-illegal uses are allowed in U.S. markets. So it's not so easy to just slap a ban on Bitcoin and everybody will roll over and accept it. No, this will be sued up the wazoo all the way from state courts all the way to the Supreme Court if it happens, and there are some really good defenses.
How long do you think that it's going to take before we build up a body of corporations, essentially, that have a vested interest in Bitcoin surviving? Because it seems like that's not really the case now. Certainly there are some corporations in that they are corporations formally, but I think what you're talking about is big business, quote unquote, big corporations that have lobbying power and that have money that they finance campaigns with, right?
I would say that, in fact, there are enough corporations right now that have essentially the main prerequisite for such a case, which is legal standing. And if you have legal standing, which means you have a corporation that is materially harmed by such a ban, you have a case. And there are plenty of organizations which will back that case with rigorous defense, such as the Electronic Frontier Foundation, the ACLU, and various other organizations that have legal funds to defend such a thing. And quite honest, if a U.S. company, one of the successful ones, perhaps Silicon Valley Bank that's getting involved now with CoinLab and MTGOX here in California, or Coinbase, which is another California-based company, if they were essentially told to shut down, I would start a crowdfunding process for their legal fund, and I'd be putting some Bitcoin into that one.
Let's assume for a second that, the worst happens and it's just flat out banned, made illegal. I mean, what do you think happens there?
I would look to buy some Bitcoin because the price is going to shoot up. Talk about tamping down on supply, right? So It depends what exactly is meant by illegal, because, again, even that has nuance. They might be able to shut down the exchanges. Disallowing individuals from owning or possessing Bitcoin is going to be a much, much higher burden to show. And disallowing personal transactions between individuals on Bitcoin would have a pretty high burden. So I'm not sure that would be done easily.
Okay. So do you think that we're going to continue to see exchanges closing as we go through this?
Yeah, this is a difficult game to play. Exchanges will be closing, but again, as Paul said, that's not the end of Bitcoin. This is just growing pains, and as long as two people have Bitcoin and have a fiat currency, they can go to Starbucks and exchange said currency for Bitcoin. It's as simple as that, and you can't stop that on a broad basis. You can't stop that when it's happening in 140 countries.
It's sort of funny that the solution for trading Bitcoin surreptitiously is to take this internet currency and instead only transact it hand to hand for other cash.
It's the ultimate decentralized economy.
Last week, we talked about some of these altcoins. So all of these are based off of Bitcoin, but there are small changes that are made, and sometimes these small changes affect a lot of things about the alternative coins. There are many of them. There are probably new ones coming out all the time. These altcoins will do things like change the frequency where blocks are generated, or the number of coins that are going to be available for the block rewards, or they're going to change the time to adjust the difficulty, or they change even the hashing algorithm itself. And then some of them have additional features, like one is the network is created via proof of stake versus proof of work, which is what Bitcoin creates the network on. Some of them have, one coin has this Emerage fee that we talked about last week. So there are just like all different things that people are doing. Regardless of whether any of these coins are going to be successful in the long term, I think we could probably all agree that competition is great, and maybe Bitcoin isn't ideal, even though it currently is the most popular and it has the most adoption and the most support and the most trading volume. Maybe there's something that could be improved, or maybe there's room for more than one cryptocurrency out there. It probably would be great if there were more options and people could just choose from among those. What do you guys think?
Yeah, all of these altcoins really represent the diversity of the Bitcoin ecosystem. Honestly, I'd be shocked if Bitcoin ends up being the one true world cryptocurrency. It will probably mutate into something else. It might be renamed. It might change the protocol parameters. It might be completely obsolete, and people exchange it for something else. I don't think it will lose its value completely, but if at some point a better coin emerges, people will be able to move their money into that one. And the nice thing is that there is no real stickiness other than the size of the economy. So if a better altcoin appears, then people can quite easily exchange their money with the necessary liquidity from one to the other. I look at this simply as expressing various opinions in the form of software. So if Bitcoin is white bread, you know, someone likes pumpernickel or whole wheat or sesame sprouted or various other variations, and they all have a place in the market. On the other hand, we really have to recognize the fact that 98% of the market is going to be, for the foreseeable future, a white bread market. It's going to be the basic Bitcoin, and that's simply a matter of inertia and volume. Right now, Bitcoin is big enough that it attracts, through this power law dynamic or network effect, it attracts more investors. So it's very difficult to get an altcoin off the ground, and that's as it should be. If it really makes a huge change that's worth investing in, people will change. Until then, Bitcoin's where it's at.
You know, I think there's some psychological factors at play here too that contribute to potentially the popularity of altcoins, and that is that there are lots of people out there who maybe they heard about Bitcoins in like 2011 and they were kind of skeptical and they're like, I'm not sure if I want to get on board. And then, you know, some time goes by and eventually Bitcoins are rising a lot in price compared to the US dollar, and people start to really regret that they didn't get in on the ground floor of Bitcoins. And so they say, okay, is there anything that's sort of like Bitcoin is, or like Bitcoin was a couple of years ago now, that I could sort of get in on the ground floor? And I think that some of these altcoins represent that for a lot of people. On the other hand, there are also the people who were early adopters of Bitcoin, or maybe we're medium-term adopters. I think we're still kind of in the early adoption phase overall, but people who might not have necessarily been super early adopters, but got into Bitcoin, and they want to kind of protect their investment. They want Bitcoin to succeed. They believe in it. They are very invested in it, I guess, emotionally and monetarily. And so they want it to succeed without competition, essentially. And so there can be those factors both at play. And it's really interesting. I liked your bread analogy, Andreas, that people are just going to have different preferences, and in the end, we'll have to see what ends up being used the most.
I like bread that can be used for more than one purpose, and one of the interesting things I've seen about some of the altcoin chains, like Namecoin, Bitcoin and the blockchain metaphor that creates it and maintains it is basically a distributed ledger. So right now we use that to track ownership of Bitcoins, but what a block like Namecoin has done is taken, in this case, website domains, URLs, and attached those essentially to this, again, totally transparent, decentralized ledger. Yes, there's the one side where we're talking about coins that specifically address something that they feel is wrong with Bitcoin, but then there's this other side that adds more features to it or uses it in an unconventional way, and I think those are really interesting.
Absolutely, Adam. I think that's where the interesting stuff is. So it's very easy to dismiss altcoin when you see things like, I don't know, I don't want to offend one particular coin, but I thought barbecue coin so good you could eat, it is an example of something that's a bit of a joke. But other than that, there are some altcoins that are very, very interesting. So let's look at a taxonomy first. First of all, there's 3 different types of altcoins. There's altcoins that are really using the very same software as Bitcoin and the same blockchain structure, but they tweak a couple of the parameters. So for example, instead of 21 million coins as the ceiling, they have a different value for that. These are the basic altcoins, if you like. Then there's altcoins that work with the existing blockchain of Bitcoin and build upon it. I call these meta coins. Zerocoin is one example. It offers anonymity and complete forward secrecy on transactions. So it really goes in and solves a particular and very specific problem with Bitcoin, which is that Bitcoin is not perfect anonymity, it's pseudonymity. And Zerocoin rides on the same blockchain as Bitcoin. And then there's completely new inventions which use very different form software and or solving a very different problem. Namecoin for domains is one great example. I was fascinated by some other applications of Namecoin. Specifically, you could use Namecoin to define and allocate shares of a corporation. So essentially, you could have completely anonymous shareholders whose proof of stake in the corporation is also the means by which they receive dividends and also the means by which they vote in shareholder resolutions. You could do the same for distributions of bonds or for any proof of ownership on an asset using the very same logic. So that opens up the possibility of having Bitcoin corporations that essentially are listed in the blockchain, are traded as Bitcoins are exchanged, and the stock is transferable in the same way that you can send Bitcoin to someone. Now, that's a really fascinating concept that could really develop into a whole new level of economy above Bitcoin.
Do you guys want to talk specifically about what some of these altcoins are and what are their features? Because I have a list of them that we could go through.
Yeah, let's do that. And then I'd like to play, I actually reached out to someone who's just about to start an altcoin chain. And I asked him basically to pitch it to the listeners. And so I'd like to play that. And in the future, actually, if you're starting an altcoin chain and you'd like to, see what people think of it, a good way to do that would be to send us a 60 to 90 second pitch, essentially, for what you're trying to accomplish with your altcoin chain. And we'll play it and see what people think.
So, okay, everybody knows about Bitcoin. I'll just read some of these basic parameters about Bitcoin. And by the way, I'm getting this from a thread on the Bitcoin Talk forums, and it's also available at the domain newbitcoins.com, which just points to this thread. So if anybody wants a really quick rundown of all these different kinds of coins, you can find it here. So there's Bitcoin. They have a block is generated every 10 minutes. There's going to be 21 million coins. The difficulty adjusts every 2016 blocks. And the hashing algorithm is double SHA-256. And then the reward initially before it halved was 50 coins per block. But then since then it has cut in half. So now it's 25 Bitcoins per block. Litecoin is probably the most popular of the altcoins, and it's not the oldest, but it is, for some reason, the one that has gotten the most traction. And the main difference between Litecoins and Bitcoins, oh, by the way, also with Litecoins, it's the only one that's seen a really significant price increase over, $1. It's trading at around $4 right now, I believe, for Litecoins. So with Litecoins, there's a block generated every 2.5 minutes instead of every 10 minutes with Bitcoins. There are going to be 82 million coins available, so that's 4 times as many Litecoins as there are Bitcoins. And the difficulty adjusts also every 2016 blocks, but that takes place faster every couple of days instead of every couple of weeks with Bitcoin. And the hashing algorithm is different than Bitcoin, which is, I think, an important defining feature of Litecoin. The hashing algorithm is script instead of SHA-256. And what this means is that with Litecoins, you can't really use ASICs to mine Litecoins. And there's a smaller difference between mining Litecoins with a CPU and a graphics card. Basically, this means that Litecoin mining is probably going to be more accessible to people who don't, have ASICs or don't want to get ASICs. It's going to be probably a more distributed network in terms of the hashing power being distributed among different people, and the barriers to entry for getting into Litecoin mining being a lot lower. I think this really appeals to a lot of people. And as we've seen the difficulty of the Bitcoin network rise very high, as a lot of Bitcoins have been mined and Bitcoins become really popular and a lot of people decide to try mining, and also as some of the ASICs miners come online, with Bitcoin mining, the difficulty has gone really high for Bitcoin. And so a lot of people who were previously mining Bitcoins with GPUs or with even CPUs have switched to mining Litecoins. And since the difficulty of the Litecoin network is a lot lower, it can be more profitable to mine Litecoins with the same equipment that one might otherwise use to mine Bitcoins, and then exchange the Litecoins into Bitcoins, or maybe hold on to them. You're seeing a lot of people do that. So I guess that's it about Litecoins. And then I would say Namecoin is probably the next most popular type of altcoin. And as Andreas kind of gave a rundown of Namecoin, it has these interesting applications like being able to create DNS system or potentially be used for stock ownership in companies. There's PP coins, and PP I think stands for peer-to-peer, or some people call it like people coins. The thing about PP coins is they are based on proof of stake instead of proof of work. So Bitcoin, Litecoin, most of the other coins are based on proof of work. You have to do work, solve a problem. That's how the blocks are created. With PP coin, it's proof of stake. And I admit I don't completely understand that, but what I can understand or grasp in my layman's perspective is that holding coins, like the people who have the most coins, that's what creates the network instead of solving problems, doing work, hashing. And I could be completely wrong on that, so I'm not really sure. Does anybody else know anything about PP coins specifically?
I think you described the proof of stake correctly. Essentially, it allows people who have coins to mine coins, from what I understand. That does create some philosophical issues for some people. On the one hand, Bitcoin is exclusive to people who have serious hardware. On the other hand, proof of stake creates a situation where the power law gets amplified, right? The rich get richer.
And that's another interesting point, because a lot of these coins do have sort of economic ideologies built into them. Bitcoin doesn't necessarily, and neither does really Litecoin, except maybe the idea that mining is going to be more accessible to different people. But I don't even think that was really in mind when Bitcoin was created. I don't think anybody really foresaw ASICs. They were kind of a disruptive technology. But with some of these other coins, for instance, Frycoin, which we talked about last week, they have this demurrage fee and this also the sort of ideology saying that this is for the working class. It will not affect people who are spending most of their income and kind of living paycheck to paycheck, but it will affect those who would like to hoard the currency, and it discourages hoarding. It's interesting to see some of these different ideas that are kind of built into the code of some of these altcoins.
What it shows is that the innovation has barely started. I mean, here you can actually tweak the macroeconomic parameters of an entire economy by creating a currency that has different characteristics. One of the fascinating suggestions I recently saw was the idea of DNA coin. And DNA coin is a proof of stake system where the proof of stake is your participation in the Homo sapiens species. So at birth, a sample of DNA from every individual who is born on this planet, the DNA itself gets encoded into the blockchain as proof of stake, the individual DNA of a unique human being, and that gives them access to Bitcoin at birth, or DNA coin at birth, which they essentially have mined by being born. So the entire Homo sapiens species has stake individually in DNA coin simply by being born. It has a fixed upper limit of issuance, of course, currently at just over 7 billion souls. And it is automatically adjusts for population growth and population decline. So it's actually a fascinating concept. And again, that shows that the innovation here has only started. All of these coins and cryptographic currencies in general are money APIs. They allow you to program economies, and people are beginning to, in fact, do that.
That is so interesting. I'm just thinking of how would genetic code be translated into the blockchain. I'm sure there's some way to do it, but...
You're fingerprinting not the entire code, but essentially you're fingerprinting enough markers that you have statistical uniqueness. So if you can pick a 256-bit number that is guaranteed to be unique just because of the vastness of the space, you can also pick 256 DNA markers in a human genome and be almost guaranteed that no two people will have the exact same markers.
Like a unique little snowflake. Just to quickly go over some of the remaining coins that are in this thread here. There's Devcoin, and as I don't know that much about Devcoin, but as I understand it, the rewards per block are really high. They're 50,000 coins instead of 50 coins per block initially. As I understand it, they have something to do with developing projects. Like they're almost for like testing different software projects.
Yeah, I've heard Devcoin referred to as the testnet.
And it's also crowdfunding because the coins actually recirculate their value into rewards for the developers. So I believe about 10% of the transaction fee goes to further development of the software. So the coin is self-financing.
Then there's Terracoin. Terracoin is a relative newcomer. There's going to be 42 million Terracoins, but they have a really fast rate of generating blocks every 2 minutes. There's 20 coins per block, but the difficulty adjusts every 30 blocks instead of every approximately 2,000 blocks. So that means the difficulty on the Terracoin network is adjusting every hour. So that's a pretty fast time to retarget. And I know Terracoin in the beginning had some real problems with just the difficulty just wildly swinging on the network as people decided, I'm going to point my ASIC at this Terracoin network and try to get some sick amount of Terracoins with this huge amount of power. And then maybe I'll decide to put it back on the Bitcoin network after a while when I get bored or it goes offline or whatever. So I know they had some problems with that. I think they're sort of back on target. A lot of mining pools were taking down their Terracoin pools for a while because it was just too difficult to deal with this, but I think they're sort of back on track. And the thing that I noticed about Terracoin was that there was a lot of infrastructure that was created for it pretty early. So there were websites, there were wallets, and even with Litecoin, there hasn't been, I guess, that much infrastructure. I think that's the major thing that's probably holding Litecoin back from getting more popular at this moment. So I actually could sort of see, like, Bitcoin being, if we use a precious metals analogy, Bitcoin kind of being like the gold, Litecoin being the silver, and Terracoin being the copper or something like that. Yeah. If it becomes more popular. So then there's Namecoin. A lot of people think of Namecoin as a scam because with a lot of these coins, we talked a little earlier about this psychological factors that come into play with these altcoins, where people really want to be able to get in on something early that hopefully becomes a huge thing and then, become rich, essentially. So some of these altcoins have had problems because the people who created them or a small group of individuals have pre-mined a lot of coins before releasing the system publicly. With Namecoin, that was exactly what happened. There were 110,000 coins that were pre-mined, and then it was claimed that they were destroyed, although it's not really clear whether they were actually destroyed and or how that could even occur. Namecoin is being traded on BTCE, and I remember when that happened, people were really excited about it. So I don't know, maybe it'll go somewhere, maybe not. It's kind of exciting to see where these go, but pre-mining scams are probably going to continue being a problem with these altcoin chains.
I think one of the most interesting things about the altcoin chains is that they almost all have a founder. And that is something where it's true with Bitcoin. You know, Bitcoin does technically have a founder in Satoshi, but he's not around. He's not someone who's advocating for it.
So there are a bunch of other coins, but I think for now we've pretty much covered the main ones or the most important ones. And again, if you want to see more about this, if you want some links to follow up to do some research on any of these altcoins, you can check out newbitcoins.com.
And now let's hear from the creator of Hayek Coin.
Hey everybody, this is Alex Merced. I'm a big fan of Bitcoin. I'm a big fan of the idea of technology, things like seasteading, Bitcoin. The reason why I'm creating an altcoin, I'm really actually forking the Litecoin code. I'm doing it more to commemorate an economist by the name of Friedrich Hayek. He wrote a lot about competing currencies once upon a time. So what I'm trying to do is create a new coin called Hayek Coin. More as a novelty coin, more as for those who to pay homage to Friedrich Hayek. Although currently I'm still working on figuring out the whole Genesis block thing. So if anyone would like to help me complete Hayek Coin by helping me complete the Genesis block part of the code, feel free to get in touch with me at alexmerced.com. Emails alexmerced@alexmerced.com.
The interesting thing to keep in mind here is that there's just no barrier to entry when it comes to creating these altcoin chains. You know, I mean, you don't even have to have a really terribly marketable idea. You just have to decide to do it, and if people think that your idea is good for whatever reason, then you can have success with that. I'm not sure if the Hayek coin is going to have a lot of success, but it's an interesting, marketing concept to say the least.
Yeah, I'm almost feeling kind of afraid if you invite people to promote their altcoins on this show, you might get inundated with a bunch of people promoting these different altcoins.
I'm very interested to see how it shakes out. Like you said, I reached out to Alex about this because I saw a thread where he was starting this coin, and I was like, hey, because he wasn't announcing many details about it, and I was like, pitch to me, and we'll talk about it and see what. I think that the more people we have talking about this, if it's a bad idea, then clearly they're going to get feedback that they're not going to be very happy about. So I think that it's going to be kind of self-selecting. People who really think that their idea for an altcoin chain is a really, really good idea that people will buy into, those are the people that we'll hear from.
And this sort of bar gets higher as time goes on because they see a lot of scams, they see a lot of coins that fail or get abandoned, and they become really, really skeptical. Oh, okay, how is your altcoin different than all the rest of those altcoins? Right.
It's just, it's what we've been saying. It's if you can't be a shining example, be a horrible warning. You don't really have a choice one way or the other. It's going to happen the way it's going to happen, but, you serve a purpose either way to the community.
Do you guys find some of the names for these altcoins kind of funny? Like, for instance, Novacoin sounds like Novocaine. PP Coin just sounds really funny to me.
There are a few out there that don't have coin in the name, right?
Yes, there actually are. There's like Geist Gold or Tenebrix, right? Those are a couple kind of like dead or dying coins.
The low barrier to entry, again, I'm very, very excited to see what people come up with and kind of what takes off because, I have my idea of what seems like a good plan for Bitcoin. And frankly, I think that Bitcoin does a fairly good job of serving those needs. Again, I'm just very curious to see what comes out.
So personal question, do you guys have any altcoins yourselves or are you invested in them at all? Are you mining altcoins? Tell me more about that.
I watched Solidcoin explode about a year ago. And that was the first coin that I paid attention to. I didn't have any of them, but I kind of just watched how it happened, and I said, you know what? It seems like if there's ever a reason for me to get involved with altcoins, I'll probably be able to figure that out pretty quickly. So I'm just going to kind of let it be and see what happens with the space. And it seems like a lot has happened with this since I haven't been paying attention.
The only real altcoin that I'm super interested in is Litecoin. And I admit I'm feeling proud because I got into Litecoin when they were like 3 cents each, and the exchange rate with Litecoins to Bitcoins was like 0.003 Litecoins per Bitcoin. And since then, the value relative to Bitcoin has increased about tenfold, and the price of Litecoins in US dollars has increased about 100-fold roughly. So I was feeling really good about that. And then I also used Litecoin as a way to start getting interested in mining. And I have been mining Litecoins for a little while now. So maybe at some point we can talk about that on the show.
Yeah, I'd love to talk about that, because mining is one of those things where I've looked at it a couple of times, and every time I do, it's like, well, that looks hard. Or like I'll download a miner installation and then I need to do port forwarding and it's like, that looks hard.
It is. There's a lot of little parameters to fix and get tweaked and optimized. Luckily, there are lots of guides and people are very generous with their information. Like a lot of this stuff is available online if you just do a little research on it, but there's definitely not a user manual about how to mine different coins and do it efficiently. And there's no one way to do it. So, but that's kind of part of the fun too.
It's just this Wild West thing. Because it's hard, there's a little bit more opportunity there than if it wasn't hard.
Yeah, absolutely.
Great. Well, that's about all the time we have for today. Thanks for joining me again for Let's Talk Bitcoin, both Andreas and Stephanie.
Thank you.
Thank you.
Even though Bitcoin has no controlling authority, and even though Bitcoin is an international currency, the U.S. legislative body is the elephant in the room and a major hurdle for the nascent currency to contend with. I sat down with Community Roundtable member Elizabeth Plauché for some advice on how U.S. citizens can do their part and help our representatives represent us.
Hi, my name is Elizabeth Plauché. I'm coming fresh from Washington, D.C., where I previously served as the scheduler and legislative correspondent for Chief Deputy Majority Whip Congressman Peter J. Roskin. I'm now honored to be a member of this peer-to-peer Bitcoin community. Coming from Washington, D.C., I've seen that there's a huge information gap, and members of the federal government and also state governments need to have of all the positive aspects of the Bitcoin currency before it's too late. As members of the Bitcoin community, we really need to get on the edge of the information gap here and work to educate our members of Congress how Bitcoin is a huge asset, not only on a personal liberty level, but also to the economy. You, as a member of the Bitcoin community, have a clear opportunity to, in a tangible way, reach out to your member of Congress and become a viable information source for them to let them know about the positive elements of Bitcoin currency. First and foremost, one of the most bipartisan issues right now to date on an economic standpoint for the U.S. House of Representatives, the Senate, and the executive branches, support for small businesses. Across the political aisle, small businesses is an important issue, and we've seen that, for instance, last year, both chambers of Congress and the executive branch put forward the Jumpstart Our Businesses Startups Act, H.R. 3606, to enhance the ability of small businesses to increase capital. Now, we know in the Bitcoin community that the best way to do this is actually through the Bitcoin currency. So reaching out to your member and highlighting the importance of supporting small businesses through the Bitcoin currency, that's one thing. Also, just talking with your member of Congress about the convenience of Bitcoin and how it does represent ingenuity. Bitcoin cuts down not only on transaction costs, but also is just a convenient way for businesses to process through customers and also get people in and out of stores quickly. Another thing, too, is highlighting just how Bitcoin is an international currency now. And with a growing economy and just a growing global nature of our society and businesses these days, Bitcoin is truly going to help businesses and in turn, again, help our economy and keep the U.S. on the market in a global way. Another thing, too, to highlight to a member of Congress is just connect it to home. Let them know that Bitcoin is becoming a household name. Specifically, you can just bring up something to them that just this past week, PayPal president spoke on Bloomberg News to highlight that PayPal is even considering using the Bitcoin currency. It's important for you as a constituent to let your member of Congress know that Bitcoin is something that's active in the congressional district. Another thing finally you can highlight is just any business in your district, or if you have a business in this congressional district, let your member of Congress know about it and let them know that any policy they have towards Bitcoin currency or any more regulation, how it will impact you as a voter in their district. So those are some ideas specifically, Adam, about how you can kind of connect Bitcoin to your member of Congress, because unfortunately there are plenty of members of the House of Representatives and U.S. Senate, and for that matter, local governments who don't know what Bitcoin is. And so you want to just let them know that it's a viable currency and that you as a constituent in whatever capacity are active, and this is a concern that you have.
Thanks for tuning in to episode 3 of Let's Talk Bitcoin. Whether you liked, loved, or hated the show, we want to hear what you think. Please send all listener feedback, comments, or questions to adam@letstalkbitcoin.com. If you're like me and just can't get enough information and perspective on Bitcoin, check out our daily newspaper at thedailybitcoin.com, where you'll find the best news presenting articles and arguments from all sides of the issue. Thanks to Paul Hughes, Andreas M. Antonopoulos, Dr. Stephanie Murphy, and Elizabeth Plochet for providing content for this show. Music for this episode was provided by Jared Rubens, Nathaniel Castro, and Owsley. You can find links to their work at letstalkbitcoin.com/music. We'll be back with episode 4 of Let's Talk Bitcoin, releasing late on Saturday, the 4th of May, featuring my interview with Joe Cascio entitled Sock Puppets and Controlling Your Identity Online with Bitcoin. Stay tuned.